Good morning. It's Harvey Jackson from Producer Profit. I'm just going to touch on one of the main things that kind of moved the market a fair bit yesterday. U.S. economy falters ahead of the Liberation Day with some of the GDP data that came out. We chart weekly has hit this bottom a few times, and I'll just show that. And I got that from Darren Fester on X as well. So U.S. economy shrinks in first quarter. Tariffs unleash flood of imports. Um, and Donald Trump kind of blames everything on the Biden administration ahead of this, and that is probably not likely to be the case that you can actually pinpoint to. But um, he's made a lot of changes, and the changes are going to have some pain, like he's been saying, but uh, outright not truth on the Truth Social, but whatever. Because he stretches the truth on just about everything he says. But anyway, so here, this is the number, and it's all about the differential of the exports, and you can see that the differential of the exports haven't hit this level ever, and a lot of it is just purchasing of all the goods ahead of the tariffs that are coming in. So this is the formula of how GDP is calculated. So you got your personal, public consumption, government expenditures, public and private investment, and then you add the exports and imports differential. And when you have a ramping up of imports ahead of the Liberation Day, you ended up with a negative GDP. And that's pretty simple just to say it this way, but that's what ended up happening. You had a huge bump in imports, and that's what happened. So the export demand. So there's some orders yesterday on corn, and that lifted corn after it slide. So this is the other headline that I put on, and I got this from Darren Fester on X, and wheat weekly testing support. So you've got your support level down here on the wheat chart, and of course you've got these downward lines here, and we can constantly making lower highs. And so that's when I say that, that's exactly this, lower high. But it's a pretty good graphic. I thought it would be worth showing, especially when you start to see where the number is bouncing off of on the weekly. Now, on the daily chart, we've actually made lower lows just recently as well. So Karen Shroud was talking about just the biomass based diesel feedstocks, and soybean, canola, and corn oil all down. The other thing you want to take note of is the used cooking oil is down as well, right? So, and that's this one here. So just about everything is down. You can see that this has been down. But used cooking oil, in the story that I talked about yesterday, China's looking to ramp up their own production, which they are, but they're looking for avenues to get rid of some of it, and looking at Europe. And because of the negative GDP, the crude oil is actually falling even more here. So this is just the canola market, and these are the holders of the contracts going into delivery today. So we'll see if they hold on to this. So this is Richardson and SG Americas. I believe that's Viterra. So what side of the contract do they have that are going into delivery? So if they're long, one might be asking the other to take delivery. Who knows? We'll see. Because yesterday's the day. So just having a look at canola, down slightly. European rapeseed down even more. Soybean oil is down to 48.5. Palm oil is down again with concerns of overproduction, and crude oil down $1.35. Soybeans down 5 cents. Soybean meal is down as well, and wheat, spring wheat is down a penny and a half. And the hard red winter is up, and the Chicago's up. Milling wheat is slightly up. Oats down. Corn up. Canadian dollars down a little bit, and the meats are all down. So let's just start off here. So the July contract for canola, it looks like a little bit of an uptick here, and then we look at the November futures, and we're looking for an entry at 641. So enter when the market gets down here. 630 stop loss, so that's your stop, and take profit at the blue line up here at 678. So the market needs to pull back for us to get into that position. Who knows? It is a Friday, and Fridays are down days usually, but this is Friday after a bloodbath of the May going into July futures as well. So now what I'm looking at is now the front months now. This is what's happening with European rapeseed going for the August contract, and some pretty long candles here too. So when you look at what position this is, now $79 differential for NAV to NAV canola. So the canola is $79 Canadian, more expensive than the European canola. Here is your soybean oil, and you see soybean oil is on a 3-day slide, still not recovering at all. It's still on its slide down. And you can see the crude palm oil futures have been on a pretty good slide for a while. Show it farther back, and these are not new lows or anything, but lows taking us back into the fall for sure. Soybean itself, this is a 200-day moving average, and looks like we're trying to reject it, even though we get a couple of days or a few days of trading above it. So that 200-day moving average seems to be maybe putting a lid on this market, it seems. Crude oil, this is what's going on. I'm not certain where to pull the trigger on fuel, but if we were to continue this slide, I would be looking at it. So if we get a somewhat of a green day, you may be calling your fuel dealer and saying, okay, today's the day kind of thing to get a little bit more fuel bought. I'm not saying buying the whole production, because I think there's still some more turmoil ahead with Liberation Day probably showing in 3 or 4 months' time even more negative things with the U.S. economy. And again, the world still depends on a huge part in the U.S. economy. So this is basically what's going on with Canadian dollar. Wheat, this is your Minneapolis contract. We're kind of getting supported here. A little bit of green, but it's not green with big candles. No big jumps there. This is your fall contract, and still looking for an upside target there, which seems like almost unbelievable that we could ever hit there. Hard red winter. Are we coming off the bottom? Who knows? Here's your Chicago wheat. It's not, trend is not your friend in this one. This is your 200-day moving average. Your French wheat, your Matif, your European wheat, it's in this downward trend. Looks like we're trying to get into that area again. Corn futures, a little bit positive after a pretty good push to go down. Now, are we going to get into this range and see if we can capitalize on a market swing going back up here? With planting and everything in good growing conditions, it might be a little bit tougher, a very slow grind to get there. Here's your live cattle. A little bit of a pullback here too, but when you look at the feeder cattle, just made higher highs, but it's taking a little bit of a breather there as well. Next week, we do have our stats scan, so a week from today, and we'll be looking forward to that.